Hello, everyone. Welcome to today's episode of Pivot to Profit, where we are here to help entrepreneurs just like you know your numbers, increase your profit, reduce your taxes, and grow your wealth. I am joined today by tax expert and guru, Alexis Sydney. What's up?
Hey, how's it going?
Awesome, awesome. Today's topic is retirement accounts, which is huge. But before we dive in, listen, entrepreneur, founder, CEO, if you are stressed out about your numbers, you think you should have more money in the bank than you actually do, you don't know where your money is going, we would love to talk to you at Pivot Business Group, help you with your bookkeeping, help you with that financial strategy and that tax strategy. Just go to pamjordan.com and schedule a call with our team. Alexis and her team of tax experts are here to support you. All right. So today's topic is retirement. Retirement. I love it. So before we dive in, Alexis, what does perfect retirement life look like for you?
Millions in my retirement account where I don't have to work and I can, sit on the beach all day and travel the world whenever I want to. How about that?
I love it. And play golf, right?
Oh, yeah, I forgot playing golf. Yes, I play golf every day.
Alexis is actually good at golf. I'm trash at golf. But I'm really fun to golf with because I score with emojis, which is a whole nother topic. But my perfect retirement is, yes, money in the bank, investments in real estate so that I just get mailbox money, right? Like every month I'm just living off the interest and I've got a beach house somewhere and a mountain house somewhere and I just pop back and forth between and then see the grandkids and like my life is golden. That's what happy retirement looks like for me. But the key to both your dream and my dream is a retirement account that pays for our lifestyle. I'm not going to talk about politics and Social Security and whatever. We're talking about actual retirement accounts that you have as business owners. So, Alexis, what's a quick tax tip that you have for us today?
Well, definitely a quick tax tip as it relates to retirement is that it's just not for the future. I know with our parents and, people, it's like, hey, retirement's for the future. No, retirement definitely has some tax saving perks now for small business owners. So it's definitely one of those extra tools or strategies that if you play it the right way, it can help you now to also help you for your future.
I love it. That's a great one. Because you're right. A lot of people are, younger 20s and 30s are like, oh, retirement, that's too far away. I don't need that now. But if you're a business owner in your 20s and 30s, you definitely need a retirement plan now because A, because your compound interest, you're going to have more money. But B, because of the tax benefits for your business. I love that. I love that. My profit tip when it comes to retirement is to make sure that you're paying yourself first. And this is where profit first comes in. This is where we make sure that there's an owner's comp account and make sure that there's a profit account so that you as a business owner are setting money aside for wealth building and tax strategy. Because if you have money in a tax account, and you don't need to, and you have a tax strategist that you can have a conversation with, instead of taking that money and sending it to the IRS and saying, thanks for letting me run my business this year, you can take that money and put it into a retirement account and reduce your taxes. But if you're not paying yourself and if you're not setting aside that profit and setting aside that cash, you won't be able to take advantage of those opportunities. So make sure that as a owner, you're paying yourself first.
Right, definitely.
All right, retirement. The good old days are coming. Right? Like the good days is sitting on a rocking chair or playing golf or whatever it is. I'll be your caddy. How's that? Um, there's lots of different retirement plans out there. Can you give us a basic rundown of what are the options as business owners do we have when it comes to retirement plans?
Definitely. So with small business owners, the common ones that we typically talk about when we're working with individuals is the solo 401k. So we'll get into, what it is. There's definitely the SEP IRA that can help out. There's like the backdoor Roth, mega Roth. It's called a number of different things. In the streets. And then there's the simple IRA. And then there's some other ones as well that are there, but these are pretty much the common ones that we introduce to clients. And we just depends on your business structure setup. I mean, the list goes on. How many employees do you have full time? Are you solo? Do you have a big corporation? It's just so many factors that determine what works best. That's why it's best to work with a strategist to say, hey, this is our playbox. This is what we have. This is our scenario, and allow us to strategically say, hey, do this, this, this. Here are the actions, here are the consequences, here are the results, and put it together. So I just say there's no one size fits all when it comes to retirement because we all have different needs or different desires for now and in the future when we retire.
I love it. So, at what point should a business owner raise their hand and say, I think it's time to have a retirement plan for my business,
Yeah. I say we all, especially if you're my age,
which is 29 and a half?
should be thinking the future. So yeah, if you're a business owner, again, if you're generating revenue and you do not have another W-2 job or something else where, some business owners have a W-2 job and it's like, I don't need to worry about that because my regular job handles that. But if you don't, it's a good time, especially if you're a profitable business, because you definitely want to take advantage of retirement where you can reduce your taxable income and put money aside for the future. So definitely, like I said, if you're making a profit, you're paying yourself on payroll, and it's like, hey, I have a tax bill or potential tax bill, and we don't have retirement set up, we definitely need to have a conversation because that setting up a retirement can determine, hey, I no longer have a tax bill anymore. And at the same time, it's one of those good things because it's not like I have a tax bill and I went to Amazon or Home Depot, whatever is your choice, and I brought a bunch of stuff to wipe it away. I always tell my clients with retirement is, hey, I'm putting this up for the future and it's helping me now. So it's not like I can't tap back into those funds if need be. So it's always a win with retirement.
I love it. So, you mentioned earlier there's different types of retirement. So, let's just go through each one. So, a SEP IRA. Who is
Yeah.
this for? Is it tax beneficial now, later? Walk us through what a SEP IRA looks like.
Yeah, so definitely with the SEP IRA, it's definitely one of the IRAs where you get to contribute up to, I believe the amount 25, they changed the numbers, it's 69,000. So you can put up to 69,000 max into this IRA account, and your employer can contribute up to 25% of your income into the account for you. So it's definitely good if you want, flexibility with the type of retirement product you have. There are some things when it comes to retirement, like, hey, if you withdraw early, there's penalties. You get all this stuff. You pay extra taxes and things like that. So the SEP IRA is really easy to set up. Is low maintenance. There's a lot of no restrictions for the most part. Where it's like, hey, you can only do this if you have this amount of employees, or if you have full time, you have to offer this to everyone. So the SEP is definitely one of those tools that I recommend with clients, especially if you are a single person business where you don't have a lot of employees is definitely one of those things that you may want to consider because again, you can max it up to 69,000. That's a lot of money
That's a
to
lot of money.
it's a
And
lot.
so, a SEP IRA is a really good way to get your foot in the door. If you, as a solopreneur, you have a business, does it have to be processed through payroll or can it be through distributions? What does that look like?
Yeah, well, you can process it through payroll, if you want. If you're doing distributions, you can do it to that as well. Some people don't necessarily have consistent payroll where they process it biweekly or month to month, however you do it. So if it's a thing of doing it through a distribution, you can have it set up and just put the money in at a lump sum time. You could just make it work for you. And that's why I say it's flexible. Whereas some of the other ones we'll talk about, it makes more sense to run it through payroll to keep up with it. And then the matching part of it and all the other stuff where something like this, if you can max it out, as long as you do it within a certain time frame, it works for you.
Okay. So a SEP IRA, you're an entrepreneur, you can pay yourself, take distributions, put it that the allocate it for the SEP IRA, and then the company can match, you said 25% of your salary?
Yeah, up to 25% or 69 of your whichever is more, give or take. So you
That
can't go
is
over.
so much money to be able to put into a retirement account.
Yeah, and keep in mind the contributions are tax deductible, so that's how it reduces your net profit. So it's like, hey, if I am a solo entrepreneur or a single, member operation or whatnot, and I need to figure out a quick win to save me something, and I have that, net profit, I definitely can consider 69,000 if I, do this, and it can be put into the SEP for you. So it's a
Awesome.
win.
And then so the money that I take out of the business to put into this reduces my taxable income. Therefore, that's how I save on taxes. I love it. And SEP IRA grows tax deferred. So I pay tax on the money when I take it out. Is that correct?
Yes, that's right. And then you can open it up. Like this is again something you could do on your own. You don't really have to go through, a special person if unless you just want that hand holding, that personal touch. But most brokerages can help you get it set up and fund it, and it's something easy you can do.
Okay. So what would you consider as the next step up? Is that a simple IRA, a 401k? What's the next step up from a SEP in your opinion?
Yeah, so for me, when it comes to SEPs, I think of more, single solopreneur people, no employees, or even if you're a S corp and you're just a single member S corp. The minute you hire someone and they are full time, the SEP stuff gets a little complex unless it depends if they're a husband or a spouse that you're employing. But when you start opening the door to outside people, the SEP, now it turns into something different where you have like a traditional 401k product, and then it gets a little complex where it's like, hey, I need to offer this to all the people if they work full time or they work a certain amount of hours within the year. So that would be the next step. And then also, we can also look at the solo 401k as well, where you can still be a solo person operation with the solo 401k. You have no employees except again, there's always an exception, the spouse. But even with the solo 401k, it allows you to, of course, you're on payroll in this situation. With the SEP, you don't necessarily have to be on payroll because they offer it to entrepreneurs who are regular, solo people, and they're not allowed to be on payroll.
Okay.
Um, so with the solo 401k, you're an employee of the company. They have some things if you are, well, like I said, your spouse, you may want to look at some other options there. But it's great for you because you get a W-2 and the max amount is 23,000 last time I checked.
Okay.
I checked fairly recently, so we're gonna go with the 23,000. And so what you can do is you can, have your W-2 income, and 23,000 of that can not be taxes deferred, and then your employer can also match, a match for your retirement account, and your employer is your company.
Right.
So it's a win for you because you're getting your W-2 tax lower. So let's just say, quick math, you paid yourself $50,000, but you decided, hey, I'm going to max or match out my 401k. Now that 50 is taxed at a lower rate. So it helps you with the W-2 side. But then also on the business side, your employer, your company is matching, and they can match up to, what is it, 46. So that still makes it 69,000 total, like the SEP. It's just you have to go about the numbers in a special way to
Yeah.
arrive at that part.
Okay. And then a traditional 401k, typically that's if you have employees and it's
Yeah.
more than just you. So how does that work?
Yeah, same concept. It gets a little, I don't wanna say tricky, I don't think that's the right word, but it gets a little complex because now you have more people in the pot. So you can look at it the same way in a sense as the solo 401k. It's just now you have to open a door to everyone being a part of the pot, the retirement pot. And I say it can get a little costly as a business owner because I experience this a lot with business owners. It's like, hey, we're really small and we may have one or two employees full time or three or four, but we really don't have the money, or we don't want to be obligated to have to match um, you know, my employees' earnings, and now that's taking money out of our pocket. Uh, So, it's the same concept where you can, get deferred, income, or your income is not taxed completely because 'cause you're putting money away. But it just really, like I said, depends on the size of your company operation. If you can afford to play the game if you want to, or if you don't, it's like, "Hey, now what can we do? Because we want retirement, and you will not be allowed to, have a solo 401k if you have employees. So there's things where you can look at using insurance as a retirement option if you
Okay.
don't want to turn on the traditional 401k because you have employees. So there's other things that you can look at if that is the case. But again, the traditional IRA, same concept. Again, it's just the matching part of it. Like, how much am I gonna offer?
Yeah.
What is this gonna look like for me? How can I make this work and not be, like, unfair to my employees? And better to myself, without, draining the company or it being expensive, for it. One thing to keep in mind also, I see this a lot, when working with, clients that newly come on board is, retirement can be a great option for them. They have the employees there. It's like we have full-time, we have part-time, but they wait till the end of the year to decide, "Hey, I wanna turn it on," and then they miss the safe harbor period. Whereas like, hey, if I do it now early in the year, you have some leniency where it's like, hey, I have a safe harbor rule. I may not have to do X, Y, and Z for everyone if I meet that deadline. But once you get to a certain period, it's like you have to offer it to everyone. So it's a lot of little nuances with the traditional versus the solo. You have to get, intermediate parties involved to
Yeah.
handle all these payments. It gets so complex. It's a lot, but it's worth it if it's gonna save you.
And if you're going to grow a team, retirement is also a great way to incentivize people to come on board with you because you do have a retirement option. And especially if you have match, because candidates are looking for those kind of benefits, not because they think that they're going to work for you for 40 years and all that, but it's a great way for them to know that the company is invested in the team as well. And the 3% that you match for your employees is still a business expense. So it's beneficial for you tax wise, and it incentivizes your team to be bought into what you're doing. So then there's also a Roth. So, how does Roth IRA work into everything that we've talked about before? Because it's a different animal.
Yeah, so with the Roths, you typically see that showing up on your personal side of taxes, where I say these numbers. I have so many numbers and forms to remember.
No
But
pressure.
about for this year, I believe it is, what is it, 6,000 or 7,000? And then if you're over 50, oh, I shoulda, had that together. You get to play catch up, with it. But with the Roths, it's definitely a lower amount. Now they do have strategy where if you can max it out, um, there's strategy around it, but it definitely doesn't apply, to everyone. So it's 75,000 catch up if you're over 50, and I believe it's 6,000 if you're just a general person under the age of 50 where you can contribute. So Roth is really good. Like I said, you can get some instant, benefits on your taxes because it can help adjust your income. But it's not such a, I guess, a game changer in a sense like a traditional, retirement 401k. It's more like a supplement in addition to, type of thing. So I definitely, recommend, like, having a Roth. Everyone should have one. And then even if you have younger kids or kids, like, get them set up with a Roth, as well because that can help them build for the future, especially if they're young. And we've had conversations about kids being on payroll and different things to that nature. Pay them through the company, you're getting deductions, but then you're setting them up as well, for the future with contributing the max to a Roth as well.
So what I hear you saying is as a business owner, a SEP IRA is a really good starting point. Once you start, you could also do a 401k as a business owner, but once you start getting employees, you need to go towards a traditional 401k, simple IRA, those kind of things. But adding a Roth component is more on your personal side. And the thing about a Roth is it's after tax money going in. So it grows tax free. So it's a different animal than a traditional IRA or 401k. And so it's a great add on to a retirement plan. But what I hear you saying is it's not what you should necessarily start with.
Well, you can start with it, but it's not gonna get you a whole lot of, like, bang or retirement. Like, it's like, "Hey, you're not gonna be able." Well, I don't know, I can't say that, but you may not get your golden retirement if the only thing you did was like a Roth, per se. It just depends if you strategically did it a certain way, that it may be advantageous for you, but I always look at the Roth as just like a supplement to something else, that you can do.
A-
And
And a tricky thing about a Roth is there is a modified adjustment gross income component to it. So if you make more than, I think it's $150,000,
yeah.
you're not even eligible for a Roth. So if you're a
Mhm.
high income W-2 earner, you can't even take advantage of a Roth.
Yeah, you get penalized and then you have to take the money out within a certain time. And if you don't, you get taxed. So it has a lot of complex components to it. So like I said, it may work for some, it may not work. It's strategy behind it. Of course, with taxes strategy. So you just want to make sure that it works for you and you know all the moving pieces so that, if you decide, hey, I need to bump my salary up, you're not over the max, and now you create a tax problem that you didn't have to have.
Got you. So, what are some mistakes that you see business owners making when it comes to retirement? What are they doing wrong?
Well, what they're doing wrong is they're not taking advantage of it. I can't tell you how many, business owners that, I know or have encountered is like, "No, we don't have retirement. Sounds good, but, we haven't turned that on yet." So it's that's what's wrong
If
because,
they don't
we
have one.
and it's like, okay, well, if something happens or, down the line, like, what is the plan for retirement? You're not going to work your fingers to your business to the bone until, you're 60, 70 years old. So definitely that's one thing I see done wrong. The next thing that I typically see is that, business owners, they'll set up, products on their own, outside, just working with, on their own, they'll hear about something like, "Hey, let me go on to Fidelity and let me set this up," or "Let me do this." And it's like, "Okay, well, you set it up, you didn't put the money in." Or you set it up with no strategy and it's not helping you from a tax standpoint. Or even with like the solo 401ks, it's like, hey, they're not taking advantage of the matching component where it's like, hey, let's make this work for me completely and not just say, hey, I'm gonna just, contribute my max, but the employer is not doing their part where it's helping both parties involved. So those are the common things that I typically see um, for the most part.
Okay, I love it. And another benefit of retirement plans when it comes to tax strategy is some of the plans you can make contributions after the calendar year ends. So let's talk to me about that, the benefits there.
Yeah, so definitely, this is where strategy comes in as well because, well, April 15th was the deadline yesterday. However, for some states, it was extended, due to if you were in a disaster area. But nonetheless, it allows you to get into your tax year. So most of us are pretty much prepared to file our taxes in the new year. So typically with the traditional retirement products or things of that nature, December 31st is typically cutoff period for most things. But then there are certain things or like the Roth and those components where you can get into the new year, you can figure out, hey, this was my tax liability for last year. And it's like, but you still have until whenever the deadline is. So I'm assuming May 1st for us Georgia people, but let's just stick with April 15th. You can contribute the max or whatever number you need to help you in taxes, although you didn't do it before the calendar tax year end of last year. So there are different things. Like I said, the IRS code is written to help us if you know how to make it help you. Where you could say, "Hey, I'm gonna owe this money," but if you go ahead and put this into that account for retirement, it's gonna give you some tax advantages before you press the button on your return for April 15th, and it helps you out. So you just need to know where you stand and be able to turn that stuff on. And I see it help business owners and even individuals. Like you can do some Roth contributions and things, even if you have a regular 401k job or you don't have a business. So, these types of things don't just help business owners, they help W-2 workers as well.
Okay, I love it. So who should a business owner seek out to figure out what retirement option is the best for them?
Well, yeah, definitely. You want to work with a financial advisor, one that specializes in retirement. So definitely having that conversation with them I think is more of a holistic conversation and approach, and not so much, we ultimately always want to save you on taxes. So that's always our game plan. But when it comes to retirement, you just really want to understand what is works for you, what do you want for the future? What does retirement look how Pam asked initially, like, what does that look like for you? Because you want to take all of that into consideration because you don't just want to put money into something and it's like, hey, by the time I get to that age, it's really not going to do anything for me. Like, I can't live off of this. But you didn't have that right conversation up front. You're just doing something for tax savings. So definitely, with our team, we have specialists that can support, do a holistic financial plan, like look at like the income you're bringing in, what products you have, and take a good picture of everything and then determine, hey, let's do this for retirement. And then we can add in a tax strategy component so you can see how it's going to save you, but at the same time, see the growth. Another thing you want to consider is like, how does this product work? Is it tax deferred, or when I go to pull the money out, am I gonna have this huge tax bill that I'm 60, 70 years old and I wasn't prepared for this? So you just really wanna understand your product and know the ins and outs and the impact of what it's going to look like when it's retirement age, or even, hey, if I need to pull some money out within the next 4 or 5 years, what does that look like? Because there are other products, we haven't talked about them, today, where there are cash balance plans and different higher level, retirement products where you put money in and it's real strategic how it's set up, but you can't touch that money between, like, a 3 to 5-year period,
Yeah.
and it's like, "What?" What if something happened? I needed my money. Sorry. So you just really wanna understand the product you have, how it's working, the tax benefits, and all the potential things that can happen, and even the payroll responsibilities as well, because that's another part that, you wanna manage as well.
Yeah. Um, the administrative side of a retirement plan is something not to be easily overlooked. Just like we've done podcasts about how to setting up payroll and that there's a lot that goes into that. Having a retirement plan is a great tax strategy for many business owners, but understand that there is administrative time that needs to be dedicated to it, both to set it up and to maintain it, especially if you're running it through payroll to make sure that the contributions are coming out properly, being coded correctly, and then you're making the payment to whoever the financial institution is to make those contributions. So just be aware that it's not, you can't just say, oh, yeah, I'm going to have a retirement plan and do this great tax strategy. It's going to be awesome. I got $50,000. There is a little bit of legwork that's needed to set it up, but then also to maintain it. Our operations team, like we've got reminders, make sure that, pay the retirement. We know we've got a calendar reminder when the renewal is, when people become eligible. Because as your team grows, and you moving up the ladder in different retirement offerings, you do need to offer it to your team members. And there's different rules for which the answer, it depends, comes in a lot with retirement, just like all tax strategy, as to when someone's eligible, full-time, part-time, C-suite, not suite, C-suite, how much you have to match. So just make sure you're having intelligent conversations with a good financial advisor to let you know, here's my goals, here's the reality of what my company looks like now. Because I've also seen where entrepreneurs set these things up for tax strategy and then in 2 years stop doing it, stop contributing because of various reasons. And we're like, why did you spend all this time and put all this effort and then just let it die?
Yeah. Yeah, you don't wanna start and can't finish, then you won't have your dream retirement, and it's like, "Hey, you'll have to work forever."
Definitely. All right, Alexis, is there any last minute tax tip when it comes to retirement?
Nothing that I can think of, but I definitely, just want to encourage any of the business owners listening. If you do not have something set up, definitely it's worth just having a conversation. I often hear so many excuses like, oh, we don't make enough money, or we're not ready, or, that's not important right now. But you owe it to yourself to have a conversation, at least know what's available to you. If you decide to, set it up, that's fine. If not, at least you know. So as you're progressing in business, you definitely can get some retirement set up and be strategic about putting money away for the future. Because again, it does help you now and you want the help now. But we definitely, as business owners, owe it to ourselves, our future, our kids, to leave a legacy and different things of that nature, or just enjoy life at a later age. So
Yes.
definitely, that's, my tip.
I love it.
Have a conversation. How about that?
I love it. Have a conversation is the takeaway. And as far as the profit perspective, I hear a lot of entrepreneurs saying, oh, well, I'm just reinvesting everything back into the business. I'm reinvesting all the cash back into the business. I can't do a retirement now. You need to make sure that you're taking care of yourself as the business owner and setting up a retirement is how you build that wealth, because you never know what's going to happen to your business. You never know what's going to happen to you, what your family needs are going to be. So this is definitely a wealth building tool that if you have money left over in the business, profits left in the business to put back into the business, I would recommend that you also put some of that money back into your pocket through these wealth building tools to make sure that at the end of the day, your business isn't the only valuable asset you have. Because when you're looking at your portfolio and your net worth, the business is great, but we see businesses that fail every day. And if you don't have other assets outside of the business, you're not as strong financially with a strong foundation.
Definitely.
All right, everyone. I hope this has been helpful. The wonderful talk about retirement. One day we can be living the good life with those grandbabies. Alexis, thank you so much for explaining the difference between these different options. Look, entrepreneurs, if you are out there and you're wondering if this is something that could help you, just go to pamjordan.com, schedule a call with our team. Alexis and her tax strategist would love to talk to you about the different options and what's available. And we do have partners that are financial planners that can put the right program in place for you. Alexis, thank you so much for your time today. Appreciate you.
Thank you.
All right, everyone. Remember, it is not what you make that matters, it's what you keep. We'll see you next time on Pivot to Profit Podcast.